Of course, like we don't know what we're doing, right? We're buying our first house. We just know that we gotta go to the loan officer and just ask, hey, like I want to buy a house for X amount of dollars, let's say $400,000. How can I get approved for this? Yes or no? Yes or no? And as a first time home buyer, the thing that you need to realize that every single person that is helping you with this process is incentivized um, when you spend more money. So realtors are working on commission, loan officers are working on commission. The title company gets a cut as well. And so no one's going to tell you to spend less money because the more that you spend, the higher their commission is, which is fine. That's how they eat. That's how it is. That's okay. But you, as the home buyer, need to be crystal clear on what budget is going to work for you before you go to a lender. Before you ask, hey, I want to get approved for X amount of dollars, you need to know what's happening with your money first. And so today I'm going to walk you through a few things that you want to be clear on and a few things that you want to know the numbers on so that when you go and you ask to get approved for a specific amount, a specific mortgage amount, you also ask in addition, hey, I need the numbers to be within this amount of money so that you don't end up becoming house poor, right? Your first house that you buy can either set you up and help you to completely change your financial situation, or it can be the thing that sucks the money out of you completely, and we don't want that. And I get so excited about talking about first time home buying and buying that first house strategically because my first house that I bought was able to completely remove the my monthly living expense and eventually help me to pay off another house and eventually quit my job. So I want that for you. I don't want you to be house poor. So first things first, if we have not met before, my name is Nobu. I help women go from frustrated and stressed about their credit to excited and ready to apply for the first mortgage. So, if that is something that you're interested, make sure you join me for the next webinar that I'm hosting. Let me see, I'll drop that in the comments. It should be coming up in a minute. But the first thing that you want to just get clear on before you go talk to a mortgage lender at all is what does your budget look like? If you're getting ready to buy your first house and you don't have a budget, you are already going down the wrong path. You got to be crystal clear how much it is that comes into your bank account every single month and what do your expenses look like in detail. You got to know exactly dollars and cents. Every single month I pay for this bill, that bill, this bill. All my bills total $500. My total money that I get every month is $1,000. Therefore, I have $500 extra every single month. You want to be clear on that because once you buy that house, there's going to be more expenses besides just your mortgage, which we'll talk about in a little bit. But once you buy this house, you don't want to be in a situation where now you're buying a house that is more expensive than you can actually afford. And if you don't have a budget right now, if you don't know what's happening with your money right now as a renter, then you're not ready to buy a house because that house is going to suck a whole bunch of money out. And you want to be clear on like what kind of money you have available before you even think about getting a mortgage. Let me know in the comments. Do you have a budget that you currently use and that you actually follow? Then a lot of y'all, you might have a budget that you wrote up at some point, but you don't actually look at it. You don't actually check to make sure are you actually spending within your limits or not. So let me know, do you have a budget? Yes or no? And then, are you following it? I'm very curious. Um, and so if you don't have a budget, you want to make sure you just, before you move forward with buying a house, start with that first. Get clear on how much rent you have coming, how much your rent is, what every single payment that you have every single month, what you're spending extra money on when you go to Target. Like, are you spending $50, $100, $150, right? Track that for at least the next 30 days. If you don't have a budget yet, track that for the next 30 days and see when you look at your money that's coming every month and you look at every single dollar that you're spending, are you spending less than what you're making? And if you are, what is that extra money that you have left over? And you can work with that to figure out, okay, so based on how much I'm paying for my rent right now, here's how much a mortgage payment makes sense, right? Do not go into buying a house without having a budget in place. Let me know. Drop a 1 if you have a budget. I'm checking the comments. Let me know what y'all are thinking. So once you have a budget and you're crystal clear on exactly how much you have after you pay all your bills that you have to pay, after you figured out, your fund money, after you have all that, how much money do you actually have to play with? You want to have that number in the back of your head or written down somewhere. So if that number is, let's say, $2,000 is what you have left over. When you take your rent money plus like extra money that you have available after you pay all your bills, after you've taken out your fund money, after you have everything figured out, then that is how much you actually have to play with for this mortgage payment, right? So rather than thinking, hey, I want to buy a house for $600,000 because that's how much houses cost around my area. Forget how much houses cost in your area. Forget how much your mortgage officer tells you qualify for. You want to be clear on, based on my budget, I can only afford to pay X amount of dollars every single month, and that's it, right? Because if you do it the reverse way, where first you go to the mortgage officer and you just ask about how much you qualify for, they're not going to tell you what your mortgage payment is going to be unless you specifically ask them. Most people just focus on, okay, I qualify for $500,000. Let me go ahead and let me go find a house that's worth that much. And then when it comes down the line and now you see what your actual mortgage payment is, now it's not going to be lining up with your budget, but now you love this house, you're all emotional, and you go ahead and do this thing that you are not prepared for yet. So get clear on how much it is that you actually can afford based on your budget, not based on what the mortgage lender says. Because the mortgage lender is not going to be looking at affordability in the sense of what makes sense for you to pay. What they're looking at is based on this algorithm, right? Based on the policy that we have within our bank and the policies that come forth from different, federal agencies. Based on those numbers, we can give you this mortgage and we believe you're going to be able to pay. But you can pay for the mortgage and be stressed and stretched to pay it off, but that's not what you want to be. Like, you want this house to be somewhere where it is actually helping you to build wealth. If you're buying this house and you're not sure if it's in your budget and now you're stretching and now you are sleepless every night because you're struggling to pay this payment, then now this dream of buying a home becomes a nightmare and potentially can completely derail your finances, which is not what you want. So once you have this budget tucked away somewhere, it's important for you to understand that when you're thinking about a mortgage payment, it's not just paying back the bank and paying back the interest. When I bought my first house, I was going to, I was looking up these mortgage calculators just like this one right here, right? And I was just putting in, okay, like how much do I want to, how much of a loan, how much interest rate, and I thought it was just how much I had to pay back, the money I had to pay back plus the interest, and that's it. That's what I thought a mortgage payment was. And so when I was looking at houses and saying, okay, this house is worth, 500,000, cool, like I can afford that monthly payment. I thought I was good, but then when we started, after I put an offer on the house, and we started looking at the actual numbers, in terms of what I was going to pay back, there were all these other fees that came up that I was not aware were part of a mortgage payment. So as you are looking at houses and you're wondering if this is something that you can afford, you want to actually do some preliminary numbers yourself to see if this is going to work based on that number that you used, that number that you pulled from your budget. So here are the pieces of a mortgage payment that I didn't know. I know now, and I want to make sure that you know as you're looking into buying your first house. So there is that interest payment and the principal payment. which if you just look up mortgage calculator, you'll be able to find that. I'll drop a link to the one that I just used. I literally just Googled mortgage payment calculator on Google and this came up. And it's going to just show you your basic payment scheme of just the interest and the principal. But in addition to the interest and the principal, your mortgage payment is also going to include the taxes on that building. I didn't know that when I bought my first house. And so you want to have an idea in the area that you want to buy, usually in the same county. Tax is going to be around the same, but it's going to be based on how much the house is worth. And it's going to be depending on where you live. So you might have a friend that buys a house in Texas and the taxes on that building is $2,000, but you $2,000 a year, whereas you buy a house in New Hampshire, or let's say even better, New Jersey, and taxes on that same building that cost y'all the same amount to buy, it costs you $250 to buy that same building as well. But in Jersey, the taxes are $15,000. And so it is super important for you to have an understanding of what do taxes look like in this area and factor that in as you are looking at estimating mortgage payment prices for yourself before you go to the lender. So here's what you can do to find those tax numbers. So I actually pulled up, easiest way to do this is to actually go to your favorite place that you look up houses. So I happen to like realtor.com, but whether you use Zillow or Trulia, whatever it is, like there's usually a section on here that shows the taxes for the building. So this is realtor.com. I just pulled up a random house up here. And if it's your first time doing this, it's fine. There's always these drop down menus towards the bottom, and you want to just like pop these open until you find the tax information. Sometimes it says taxes specifically, so you just pop down that tax item. I think for realtor should be under property. Let's see. Property details. So just scrolling down. All right. So on realtor right down in property details says other property info. And then it says annual tax amount $39.62. So for this particular house, the taxes on this are $3,962. And this is an annual thing. So every single year, this is the tax amount. So you're going to go ahead and take this and you're going to take this $39.62 divided by 12. So this means that every single month there would be $330 that would be added to your mortgage payment for this particular building. So let's actually take the same house. This was, I think, let's say $500,000. Let's say you're balling and you're going to buy this house for $500,000, which is a lot. $500,000. So for this house, before we put in our taxes, if you just looked at just the payback amount at 7%, it'd be $3,300. So now, if we now add in the property tax, this was $3,300, I think, right? 32 something. Let's just say $3,300. So now you're going to see that that's going to be added to this total. You can do this on your own without using this calculator. You can just do this with Excel, piece of paper, whatever. So just know that you're going to have to factor in how much taxes are for that building that you want to buy before deciding that it is a good deal. Something else that threw me off when I was buying my first house is that your mortgage payment is also going to include your homeowner's insurance. So you are borrowing money from this bank, right? And they want to make money off of lending this money to you. So now, if you don't pay them back, they're going to take that building and they're going to foreclose and sell it to somebody else. And so they cannot do that if something happens to this building, if there's a fire, if there's a flood, if, a wall just caves in. They want to protect their investment. And so you have to have homeowners insurance when you are buying a house and you are using a mortgage. So when you're thinking about or you're calculating, can you afford this payment? You're going to have that interest and principal payment that you're going to do. that you're going to use a calculator to figure out. You're going to add the taxes to that. So the annual taxes divided by 12, add that amount to that. Then you're going to consider the homeowner's insurance as well. So if there's a house that you're seriously considering, or you can just like, if you're considering a specific neighborhood, you can call your insurance agent and tell them, hey, I would like an estimate for this particular building. You give them an address and they'll tell you, they'll ask you a few questions. When was the house built? What kind of material is it? Is it a brick house? Does it have vinyl siding? And then based on those few details, they'll tell you, they will give you an estimate for what the homeowner's insurance would be on that building. So it's good to call and get an idea, because you may think that, it's going to be $1,200 for this building, and it might end up being like a $3,000 building, or it might end up being that this building also needs flood insurance. And so instead of just paying a $1,200 premium, now you're paying your regular home insurance plus flood insurance. So you want to get an idea of what those numbers look like, because then now you can take that insurance estimate, divide that by 12, and you're going to add that to your mortgage payment as well, right? So now if you were just thinking that it was just that interest and that principal, now we're adding the taxes, now we're adding the homeowner's insurance, and the final thing that you're going to add to that is PMI, so private mortgage insurance. So if you are, let me just check this. Perfect. If you are buying a house where you're not putting 20% down, the bank is going to add an extra layer of protection. Yes, they're going to sell that house if you don't make that payment, but they're going to add an extra layer of protection, which is the PMI. And every single month, you're going to have to pay a specific amount every month, and that's going to protect them in the event that you default. This is if you're putting less than 20% as a down payment on this house. So with the PMI, that number is going to vary depending on the down payment you're putting on and depending on the value of that house. But you can estimate about 1% of the sale price. It might be a little bit lower, might be slightly higher, but that's a good estimate to put in. So you're going to take the price of that house times 1%, divide that by 12, and you're going to add that to that mortgage payment. So now, once you have all of those, once you have an estimate of the interest and principal payment, the taxes, the homeowner's insurance, and the PMI, this is where you now have a good estimate of how much it is going to cost you to pay this house every single month. Now you can go back to that first number you looked at, your estimate amount that you have available in your budget, and see, okay, so based on how much I have in the budget and based on how much this estimate is that I'm looking at, can I actually afford this house with $500,000? And if the answer is no, then you got to bump that number down. Now, when you go to your mortgage lender, they are going to tell you how much you qualify for just based on how much you make, your debt, and your credit score. So even though when you look at your budget, a house with $500,000 is not comfortable for you, you can still get qualified for that much from your lender. And what they're not going to tell you is that you don't have to use that full amount that you qualify for. So my very first house, I was making $48,000 a year, and I was able to get a mortgage for $650,000. That's what I was qualified for. I didn't use that full amount because I didn't want to be in a situation where I was paying more than what was comfortable for me based on my day-to-day. So even though the bank said, hey, you can take this money, grab it, you don't have to take that full amount. My second house that I bought, my budget based on how much I wanted to pay a month was $150,000. That's it. I was qualified to get $350,000 to use for that house, but I didn't use that full amount because I knew that if I did, then my monthly mortgage payment would be a lot higher than what was comfortable for me. And so what you want to do is you want to get clear on, okay, I know how much is available with my budget. Now let's take a look at some houses and let's see what these numbers might look like. Okay, like 500,000, that's too much. Let's try 400, that's too much. 300, okay, cool, that's comfortable for me. Then you can go to your lender and say, hey, what is the max I can get? Just so you have some wiggle room, but just know that for you, you want to try and keep that as close to that number that works for you based on your budget, as opposed to just maxing out and just going for that house just because the lender says you qualify for all this money. Because again, it is in their interest for you to spend the most amount of money. If you use the full amount that you qualify for, they get a bigger commission, right? Doesn't mean they're bad people, it's just business. But you as a home buyer, you need to be informed, and you need to be clear on what you want and what works for you, so you don't end up as the person that's getting a bill as opposed to actually making an investment. Let me know in the comments. Are you still excited about buying a house, or are you a little bit nervous? What do y'all think? And this is just so you don't end up being house poor. We don't want that. As you guys know, once you buy a house, right, you are now responsible for everything that goes wrong. And even if you buy, excuse me, even if you buy a house that's recently fixed, a house that's super new, things are always going to break. So within 3 months of moving into my first house, the water heater just crapped out. It was a brand new water heater. It had just been installed and it just stopped working out of nowhere. And the thing is, most of us get into buying a home and we don't think about planning ahead for the things that are going to happen, right? It's not, if something's going to happen, it's just when. So as you're thinking about your budget, as you look at that budget number again and you look at the mortgage payment, also think about putting away a specific amount of money every single month, specifically for your house, right? So you're going to have your regular savings. Maybe you have a vacation account. Maybe you have an account for your kids. That's cool. But also keep a certain percentage every single month just for maintenance items that come up, right? So that when your water heater, stops working, when your boiler stops working and your plumber comes and says, hey, that's $5,000, you don't need to get into credit card debt. If you every single month are putting away money specifically for the maintenance of your house, then you are in a better position where this house is not going to stress you out because you already have a mortgage payment that you did the math, you know what works for you. And now you're going to be putting away maintenance money every single month. So when something doesn't work, you're not going to be surprised or taken aback by that amount. So if you can look at your projected monthly mortgage payment, right? So let's say you did the math and so you looked at the house amount that you want, and 2,800 is the your max that you want to put aside for your mortgage every single month. Then now you're going to take that and do at least 5% of that. If you can do 8%, that's great. So 5% of that monthly mortgage payment. And pick a separate account where all you're doing is that 25% 5% of the 2,800, you're putting it away every single month, just in case something happens where you need to pull a whole bunch of money and get something fixed, right? Hopefully you won't have things breaking consistently. So that 5% will build up over time. So as you need something, as something happens, then you are good to go and you're not stressed about the money to keep this house up, because you will need to keep it up 100%. I'm just checking for the comments. Let me know what y'all are thinking. If this helps you to budget for your first house, drop a 1. Let me know. Let's see. So even though this house you are going to be responsible for the upkeep, right? So you are going to be spending money on this, but every single time you pay into this house, you are every single time you're paying the mortgage on this house, you are pretty much creating a little piggy bank for yourself, because over time, as the value of that house goes up, or even if it doesn't go up at all, as the money that you owe starts to go down, then you could always pull the money you put in out, and do something else with it. But my favorite way of buying houses is actually buying a multi-family. So buying a 2-family, 3-family, 4-family, and I live in one unit and other people are living in the other units to help me pay my mortgage. And that way I am not paying at all into this piggy bank. Other people are paying into it for me, and I am creating a huge surplus in my budget. And so if you want to know how to do that, how this whole thing works, where somebody else can pay your mortgage down for you, I'm going to link that video right here. So you can watch that. If you're watching the live, I will link it in the description box below.